Hi Wallabies, welcome to Community Living. My name is Malebun Gosi. If you're new to the channel, please remember to subscribe. And if you are coming back and stopping back by, thank you for your continuous support. We're currently on 352 subscribers, and thank you to each and every one people that have subscribed, right? And as I've said, if you're new, please remember to subscribe, and if you haven't subscribed but you're stopping back by, please remember to subscribe as well. We really need your support to grow, and we really need your support in terms of just watching the channel as well. So we are a financial literacy channel dedicated to young Black professionals, and today's episode is related to DIY investors or investments, right? How do you actually go about buying securities, right? So I'm not just going to talk about shares, I'm going to talk about securities in general. So by securities, we're referring to anything that is publicly listed on the stock market or stock exchange, right? So it could be what most people know as shares, stocks, or equities. So that's one type of investment, right? Or one type of asset, right? And it's called a security as well. The other thing could be an ETF. An ETF stands for exchange traded funds. They work very similar to unit trust, but the only thing is that they do not have an active manager, right? So you don't pay for things like management fees and so forth. So they're usually a cheaper form of unit trust, right? And they usually act on the stock market as its own security, not like just a unit trust where it's a combination of assets, right? Various assets that make up that unit trust. So they are performing security on the stock exchange or stock market. Then the third one would be your ETNs. They are very much similar to ETFs, but the difference is that this is based on credit or loan, whereas this is based on stocks, right? So this is a combination. This is just something that is tracking a certain type of stocks. Usually you'd have for maybe like a certain market, let's just say for property, you have REITs that become ETFs that are called REITs, right? And then another thing is you have your bundles and you have your baskets, right? And then they act very similar to your ETFs and ETN, the bundles and the baskets, right? But then the thing is that some of the bundles and baskets, you actually have to pay some management fees. So they are actually very much similar to unit trust as well, because there's an active manager, there's someone who's doing some analysis to say, okay, which stocks actually perform really better, or which stocks are doing really well and suited for that type of basket or bundle, right? So that you get the most out of buying that basket or bundle. So those are the securities that I'll be talking about, and how do you go about buying them on a DIY investment platform, right? By a DIY investment platform, I just mean a platform that enables you to pick and choose as many securities as you want, whenever you want, however you want, right? They act very similar to a stock market or stock exchange. They'll have those trading hours, right? If you were in SA, they'll trade from 9 to 5 as well. So that's when you'll be able to like buy your securities then. But yeah, that's basically the platforms that I am referring to. So the platform that I use is Equities, but there are I think a number of other platforms that you can use. I think Frank app is one of them. I haven't really started using it, so I'm not 100% sure about the entire product offering, but I do know that they are a DIY investment platform, right? And another thing will be your ETF SA or ETF unit trust, but yeah, the ETF SA umbrella, right? And then when did I start? I started DIY investments, I think 2 or 3 years ago, around 2018. So that was 2 years back, and I started while I was a student, and that was after watching quite a number of financial educational channels, and they were just promoting, or they were just pro DIY investments. and also how you can go about it and what you need to understand before you become a DIY investor, right? And some of the things that I learned from the DIY investment route, which after like a number of years of being a DIY investor are not essentially true, was that you need to buy what you know or what you use, right? So let's just say for speakers, for just a practical example, maybe if you use like JBL speakers or JBL's earphones and all those things, then when you go to the stock market or when you buying securities, you buy securities that are related to what you use, which is maybe JBL, the company that produces JBL speakers, right? It could be listed in that name or it could be listed in the holding name, right? Let's just say, for example, Time Bank is not listed as its own security. You have to buy ARC Investment, which is African Rainbow Capital Investment, that has a bunch of companies listed underneath that. So the holding company is ARC, and that is the one that is publicly listed. So if you want to buy a stake of Time Bank, then you buy ARC, right? So that's the advice that is still sometimes going around regarding DIY investments. But after 2 years of being a DIY investor, that didn't necessarily work for me, and all the investments that I actually bought related to what I thought would work, I ended up having to sell them. And I was glad that I only bought like maybe that time $20 worth of it. And that's another benefit of a DIY investment platform. They don't have minimums, so you can buy as little as R1 worth of something, right? They really don't care, because you can buy what is called fractional shares. So fractional shares just enables you to buy shares with any amount that you have. So if a share is R1,000, you can buy a fractional share 200, and you have 20% off that share. And as you buy and buy, then you can end up let's just say each month you top up the 200. The fifth month you'll have one whole share, right? So that's what DIY investment platforms also allow you to do, to be able to buy fractional shares and buy at your own pace, at your own rate, and any amount that you have. So that's why I went with that route, instead of going for like maybe guys that will be like, okay, fine, you want to invest, then pay 500 rands per month, and 200 rands is for the manager, 200 rands is for this, maintenance fee this, minimum that, that for me was just a bit frustrating, and it was getting in the way of what I wanted to do, which is learning how to invest, right? So that's another thing that I was able to achieve by being a DIY investor. I learned how to invest and the strategies that work for me, not for everyone. So I don't do like a fundamental analysis or technical analysis. So technical analysis is usually what the traders are using, which is just reading charts and all that. Some people do look at the news and look at what's happening in the economy and then read from there, and some just go straight into the charts. Then fundamental analysis is really sitting down with your fund fact sheet, which every security should have, and usually the ETFs have it, but some stocks usually don't disclose it on like the platform, but you can find it somewhere. So that's what the fundamental analysis usually help you with. So as I've said, I'm not doing this to the recommendation that you buy what you're supposed to be using did not work well. What worked well was the thriving stocks, right? So on the Equities platform, they usually list stocks that are thriving, and I just went and bought those stocks, and usually even after a year, 2 years and so forth, those stocks are still performing really well, right? So I do pay attention to what's happening in the news. I do pay close attention to the stocks that I've bought. Let's just say for Capitec right now, I know that there's a lot of things happening in the background. I think ties with PSG, Workcard, and all those things, right? So I know that it's going to perform really badly at the moment, but it doesn't necessarily mean 5 years from now Capitec will be performing badly, right? Especially with the risk and the innovation that they're taking as a very small let me not say small, but a medium-sized company that is growing, that is also taking its own shape in terms of the performance in the market and all those things. So as much as I'm not gonna go and sit down and be like, how did Capitec perform this year, I have a clue of how it is performing in general and what are the reasons that it's performing that way. So that is the strategy that I employ in terms of deciding whether or not I am going to sell a security that I've bought, because I use the long-term strategy method, right, whereby I buy a stock and I try to hold for as long as I can, right? If there's no specific reason for me to sell, I'm not selling that stock, because for me, investments are actually going to become something that gives me a passive income, right? Or I will only sell if it's really profitable and I really see another investment option that I can go for, but that time my initial investment has given me some form of profit. So that is the investment strategy that I'm employing. And also I am employing an all seasons portfolio, right? An all seasons portfolio just means that regardless of whether the market is performing well or it's performing badly, right, I always buy like the stocks that I'm buying, because they are able to sort of mitigate what the performance of the stock market. So I have my gold, which are things that hedge the market. Hedging just means that if the market is a bear market, the gold will perform well, because that's what most people usually do. They leave these companies that are still profitable, but because it's an economic meltdown or economic recession, then they go for gold, right? Because that's what previously in the past used to be a good hedge or a good way of securing your money, right? Another thing is having different types of securities, having ETFs, and also even with the securities that you buy, right, you've bought in the like mineral, so you just have a portfolio that will be able to withstand the performance of the market. And then another thing that I am doing is what is called rent cost averaging. So rent cost averaging is, what it entails is that regardless of whether the market is doing really well or really badly, as I've mentioned, I always invest. So okay, so thank you very much for watching the video and supporting the channel once more. If you got all the way this far, I really hope you understand what DIY investments are all about, and you will be able to start on your journey. If you haven't started, if you have started, please do continue. And if you have any questions regarding DIY investments, please do comment down below. And if you are a DIY investor, please do share some of your tips and what has helped you in your journey as a DIY investor. And if you do recommend DIY investing over the other forms of investments, do comment down below as well. So thank you very much, and I hope the episode was worth it for you. Love you.